Hello, my name is Steve Bigelow with the Candlestick Forum. You'll be surprised at how much more easily you can identify what the market trends are doing, whether they're a pullback or a market reversal. It doesn't really matter what the talking heads tell you on the financial news stations. If you can see that you're in a downtrend, they can't get up above the T-line in the Dow. This tells you want to be predominantly short. Starting right from here with a Morningstar type signal that your downtrend started. Same scenario here on the NASDAQ. When they did your bearish best friend gap down below the T-line, there hasn't been too much to analyze. You might have had a reversal here, but they couldn't get it up above the T-line. You stay short. This is what allows you to find which patterns are working to the downside that correlate with the overall market trend. And as we saw in PI, we made some very good profits on this. And when do we take profits? When you start seeing buy signals in the oversold area. Same thing on forward. There's your dumpling top again with a bearish left-right combo gap down. You stay short. However, notice today it did a hammer type signal in the oversold area. So is there more downside? Well, the probabilities are starting to go against you a little bit because look how far away you are from the T-line. Remember the T-line rule that the further away you are from the T-line, the higher the probability they could come back up. Now, we don't know whether they're going to be opening lower or higher. So today we took off half the position with good profits. If it opens higher, we'll close out the other half. If it opens lower, we're still making money in a high risk area on the other half of position. So we know we're in a downtrend when the biggies like Apple, Amazon, Tesla are all selling off with kind of this consolidation, slow selling. We shorted Roblox. Again, same scenario. They gap down, producing a lot of strong selling indication, consolidate, and then they continue their downtrend. Any analysis of candlestick charts is basically identifying who is stronger and what signals and patterns were created to tell you whether you're in a bullish trend or a bearish trend. This looks like a rollover where if this is even wave one, wave three could be to the downside. Essentially, every time you see a pattern set up, you know what the expected results are likely to be, continually putting you in a high profit trade situation. CrowdStrike. You're in a downtrend. This is called a blue ice failure. Notice how the 50 acted as support. They fell through the ice. They came back up to find the hole they fell through. They fail. The next target is if they drown, they're going to the bottom of the pond. So anytime you can see a pattern, DOX, a bearish J-hook pattern, wave one, wave two, wave three. Again, all we teach in the Candlestick Forum chat rooms is identifying what human nature does same time after time. So again, join us for a 2-week free trial. It's summertime. You'll be surprised how much more visual evidence there is in candlestick charts than any other trading technique. That'll be it. We'll see you in the chat room, and hopefully we'll see you tonight in our open chat room analysis starting at 8 p.m. Eastern Time. We'll see you then.